It is Tuesday, December 9th. Do another trade recap, part of posting every single day. Start fresh and remove our drawings. Okay, so I'm making this video a lot later in the day because I had tests. But if we come into the morning, we had a lot of levels of liquidity up here. So this is the 4-hour time frame, and we also had this low down here. Not sure why I drew that. And then these lows down here, right? And above, what did we have? We had a 4-hour fair value gap up here, which you can see the bodies respected perfectly, which is algorithmic. And then dropping down to the 1 hour, we kind of had again just all these stacked highs up above. So we had either wanted price to come up and then take the lows, or take the lows and then go higher. It was kind of neutral because we had taken out this higher time frame low down here. We had taken that low out, and then we were also respecting this gap up above. So it was kind of a, seek and destroy day for me. So if we go to market open, market opens, I'll mark out where market opens. This line right here is market open. Market opens, and we first get this little, we first get this tiny liquidity sweep above, taking out this high here, and then high to the left of that. And then since my overall bias was bullish on the day, I wanted to see this low get taken out if we were going to go higher, which did end up happening. But to get there, we took out these little minor buy side liquidity levels and then went lower. So I actually sat out on this trade because I wanted to see we had red folder news at 10 a.m. and we also have FOMC tomorrow. And so in my mind, I'm thinking there's no way I want to be in a trade before red folder news, especially when we have FOMC coming up the next day. So I had my eye obviously on this fair value gap right here. I need to delete the old market open line. So that fair value gap right there is where I had my eye on. And this was a textbook inversion fair value gap after the liquidity sweep. It was also on the highest time frame available, which was the 1 minute time frame. So many people took this. This was just a simple, here stops were either here for final TP up here for pretty much a 1-to-1 risk to reward. But to get a truly positive risk to reward, you would have needed your stop slightly more modest, like that. I know some people went like right here. But yeah, and then some people actually held up to this high. Held up to this high up here because we had all this LR to the left. And then so in that case, you could have had your stop at the swing low. But yeah, I sat this out because, like, for 3 reasons. Red folder news hadn't come out yet. That's what came out at 10 over here. Red folder news hadn't come out. We're in the month of December, and FOMC is the next day. And so I'm thinking, I just don't want to be in a trade before news. So by the time this trade started playing out, and then by the time news opens, by the time 10 a.m. news comes out, I said 7 a.m. because that's my local time. Right here, let's do the news candle open. So news opens right here, right? And at this point, my draw on liquidity had already been hit for the day, which would have been these equal highs inside this gap to the left. And so I'm thinking I don't really want to be involved in a trade if the draw has already been met. So it's like, dang it, too late. missed this opportunity. Two of my friends took it, but that would have been the trade of the day, and I missed out. I might live trade FOMC tomorrow. I might try to pass the 2 Apex accounts, trading it. So pretty much full port both the accounts. Get them passed would be nice. And yeah, but really the only other trade I would have seen myself taking was once we had, if I look over here, once we had taken this high right here, and then we have this pretty aggressive V-shaped reversal, inverting this 1 minute fair value gap. I could have seen myself getting in here and then going to at least the next unfilled gap, which in this case, I believe we had a 3 minute. Did we have a 5 minute? No. Okay, so I'm wrong there. I would have been a break-even trade, because I would have gone break-even either at this high here, or that low there, or the low right below that. In both cases, would have been stopped at break-even. But yeah, and what would have been my target for this short? It would have simply been 50% of this range. So if we say we get in a short here, what could we target? Well, let's mark out 50% of equilibrium of this range here, from there up to there. Let's make that black. It's so hard to see, but it's literally right here. It's this little line. That would have been 0.5, and as you can see, we actually just barely went there, and so that would have been 1-to-1. You would have had to have your stop right there, which isn't the best, but you know, better than nothing. That's the only other trade I would have taken today. But all in all, no trades for me today. Missed out on an A+ setup, but market's not going anywhere, and I have the rest of the week and FOMC tomorrow. So FOMC, I'm going to trade the 2 Apex accounts. Hopefully get them passed, or blow them. Hopefully not. But then I want to trade my funded futures account smartly the rest of the week. And I'm definitely going to post a full live trade this week at some point. But yeah, this is day 2 of posting every single day until I make 6 figures. So subscribe to be part of the journey. It's going to happen one way or another. But yeah, it's just going to be documenting the journey. So I'll be back tomorrow with day 3.